Okay, so in this section, we are going to talk about finally posting. Now we've established our chart of accounts. Now that we have our multi-column journal from chapter 3, now we're talking about posting these transactions to our various general debit and general credit accounts columns in a journal. All right. Again, my disclaimer is again, we're learning the manual system and what ordinarily you would see in a computerized accounting system. Transferring information from a journal entry to a ledger account where we actually keep track of what our balances are. That is called posting. And you have to be thinking about, okay, during this process, how would I know, for example, in the middle, how I knew what my cash balance was at any point in time? All right. Again, we're posting entries from our multi-column journal from our previous chapter into various general ledger accounts. Now let's see how this looks in reality. We're going to go through a very specific 5-step process. We have our multi-column journal on the top here, some month and day of the second, where we did something with supplies. All right. And down below, we have our account form in the general ledger called supplies, which we learned in the last section, where we have the account name and we have the account number. All right. And now we're going to start posting. And when we post, it's going to look like this. We're going to write the date down here. I guess this was January 2nd, 2000, whatever. All right. Secondly, there's number one. Secondly, we're going to write the journal page numbers. So on the journal page, we're on page 1 because we want to be able to cross-reference back to the entry that we made in our multi-column journal, in our general journal, so to speak. That's number 2. Put that page number down there in your post reference so you can go back and say, okay, where did this transaction come from? Thirdly, we're going to write the debit amount. Here, we're posting $165 debit to supplies. Again, this is prepaid supplies that go in inventory that we use up over time. It's an asset with a debit balance. So we're going to write that as $165. Just a reminder too, we don't put dollars, we don't put cents into our general ledger. We put it into the right category for dollars, and the cents go off to the right as 00. Then we write the new account balance where we have, move my picture out of the way a little bit, where we take our debit. We don't have any credits, so our new balance is going to simply be 165 based on that very first transaction of buying supplies for our business. Our fifth step is to take our account number, supplies of 150, and drop it back into the post reference area in our general multi-column journal. Again, so we'll be able to track and go, okay, we've posted supplies to an account called account 150 to complete the posting process. Again, I'll say this would be computerized. It would be the same theory and same type of stuff going on. It's just going to be a little more automated. All right. Very important that we write the post reference page number in our general ledger, and we write the account number in the post reference in our general journal. And again, we calculate the new balance by taking our previous balance, and either in this case, supplies has a debit natural balance. The normal balance is the debit side. We take our previous balance, which in this case there was none, and we add our debits and subtract any credits. All right. Again, it's important that we do that last step of putting that account number back into the post reference column. All right. Let's go look at another entry here. Now we have a second supplies entry now coming in on the 5th. All right. And again, we post these multi-column entries individually as we go along. Again, we'll review those 5 steps for posting. I'll put up some posters, by the way, in the classroom to highlight these posting steps because it's something new. posting to general ledger accounts. All right, so we have a second entry on the 5th. We bought supplies, January 5th. We don't need to write the month again, nor the date, the year, just the day of the month. So we write the date. We write the journal page number. We're still on page 1. We're going to put that in our post reference column. We're going to write the debit amount. We're bringing over $220 from our general debit column, supplies, down here, debit amount, 220. And again, supplies has a normal debit balance. So if we're debiting supplies and our previous balance was 165, we're going to add 220 to come up with a new balance of 385. We've had two transactions, both debits, both increases to supplies. All righty. Then in step 4, we're going to write the new account balance, 385, on that second row. We're going to update our balance after every transaction, which again, in a computerized system, it would do it for you. And finally, we're going to write the account number, 150, back in the post reference column next to supplies in our multi-column journal. And again, I'm saying multi-column journal and general journal kind of interchangeably there. All right. Here we have another transaction. This looks like we put money into our business, into Michael Delgado Capital. Again, capital has a normal balance of credit when we increase the value of our business. So we're going to write the date January 2nd. We're going to write the journal page number, page 1. This would be like the very first entry of the history of this company as the owner putting money into the business. We're going to write the credit amount, 2,000, in the credit column. We're going to write the new balance, 2,000, because again, it's a normal balance of credit side, 2,000. And we're going to return to the journal and write 310 in as our new, as the post reference for Michael Delgado Capital to show that we've posted that to that account. We want to be able to cross-reference and go back and see if we have any questions about any problems with our accounting system. We've properly documented both the page number of the journal entry of the general journal page on our general ledger, and we put the account number in there, 310, post reference into the multi-column journal. So again, what are those 5 steps? Well, we write the date, we write the journal page number in the post reference column of the account form in the general ledger. We write the amount brought over from the multi-column journal into the debit or credit column. We calculate and write the new balance in either the balance debit or balance credit column, which should follow the rules of everything on the left side having a normal balance, everything on the left side of the accounting equation, assets equals liabilities plus equity, having a normal balance of debit. Everything to the right, liabilities or owner's equity, have a normal balance of credit. We then go back to our multi-column journal and write the account number in the post reference column. Are the totals of the general debit and general credit columns posted? Why or why not? Well, no, they're recording the result of posting of transactions that are posted, then we're just recording a new balance thereafter. But no, we don't post anything in the total. We don't post any of the totals in general debit and general credit. The individual transactions have been posted, but the totals are not. We record a new balance each time we post an entry to our general ledger. Let's go to Mind Tab. Again, you may need to pause here. Go to Mind Tab. And I am in Working Papers 4.2 under Work Together. You might need to pause and get that assignment open. And here is our chart of accounts. And down here it says, when a service business uses the previous accounts, posts separate amounts on each line of the journal that need to be posted individually. In other words, we can kind of skip cash and sales credit because they're already going to be shown there. We're going to post everything else. Everything that is in the general debit or general credit, we're going to post. So we're going to start with Amari Capital on April 1st. So a document number, I'm on page 1 of the journal. All right. So let's go down to Omar Bourget Capital. And do you think I need to pin this? I'm afraid if I pin it though, I'm gonna like run out of room. Can I even pin it? I can't. So $2,500 on April 1st. So on the 1st, and when it says item, I'm not exactly sure what it's talking about. Post reference is going to be 1. $2,500 is going to be my credit, and my new balance is going to be $2,500. Now, item is kind of a new one for me. Post amount, they need to be posted. Select the check mark when necessary. Okay. All right. Let's see here. I put in page 1. I need to go back. This is account number 310. I need to go back here and put in 310. So again, the steps were put in the date, put in the post reference of the page number in the journal, put in the debit or credit amount, calculate the new balance. That's step 4. Step 5 was put the account number back into the post reference in your journal. Prepaid insurance, $330 on April 3rd. Prepaid insurance, put in the date the 3rd. Journal page 1, $330. New balance, $330. Count number 140. Count number 140. Supplies, we purchased $160 of supplies on April 4th. Put in the date. Journal number. That was $160, right? I just lost track. Yes. $160 debit to supplies. $160 is our new balance in our supplies account. It's our initial purchase of supplies. Go back and show that account number 130 as being posted. Next, we have accounts payable, Reedy Supply, 160. Now, that's the second part of that entry. Sorry, we had 2 general column debit and credits. I did remind myself what's going on there. Accounts payable, Reedy Supply. Once again, that date was the 4th. Put in our post reference 1. We're increasing a payable or a liability. We're crediting 160. Our new balance that we're going to owe Reedy Supply is 160. We're calculating a new balance. Sales credit, 325. And cash, 325. Select the check mark when necessary. Well, there's no account title needed. We can just skip that because we already have it in our special columns, sales, credit, and cash. They're asking us, saying that we don't need to worry about those. Next, we have accounts receivable, Dan Carroll, 122 on the 9th. On the 9th. Post reference, journal 1, $122. We sold something on account, $122. Dan Carroll owes us $122 for something that we sold him on account. Next, we paid rent expense on the 12th for $260. Oh, wait, Reardon. Let's go back and put the right thing here. See, I need to keep track of me putting in the right things here, and I just skipped the last two, didn't I? I kind of got in a hurry. Reedy supply, accounts payable, 210. You need to catch me on these things. 210. We can just put a check mark here, right? Because there's nothing to post there. Accounts receivable, Dan Carroll. Now that I'm back on track, 120. Now let's make sure I'd use the 5 steps again. Rent expense on the 12th for 260. On the 12th. Step 1, date. Step 2, journal page. Step 3, debit or credit amounts. That was rent expense on the 12th for 260. And new balance of 260. Okay. Go back and post the account number 510, rent expense. Accounts payable, Reedy Supply. It looks like we paid them on account. We have an $80 debit to accounts payable on the 15th. Put in the date. $80, right? It's right there in front of me. On the 8th, journal page 1, debit for $80. Now here we have to do some math because we had an additional initial balance of 160. We're debiting 80. And so our new balance is going to be a credit balance of 80. We had our initial balance 160. We decreased it by 80. And now our new balance is 80. Step 5 would be to put back the account number 210, accounts payable, Reedy Supply. And we're done there. Looks like Dan Carroll paid us on account $65 on the 16th. On the 16th, journal page 1, general credit of $65. Now again, accounts receivable has a normal balance of 122. We're crediting it for $65. So now we're going to take 122, our debit, minus 65, our credit, and we're left with $57 if my math is correct. That's step 4. Step 5, go back and put 120 back into the post reference in the general journal. Finally, Omar Bourget drawing. It looks like the owner's taking $500 out of the business in a drawing account on the 25th. 25th, post reference, journal 1. Drawing is debited for $500. Step 4 is its new balance of $500. Step 5, take that account number 320, put it back up in the post reference in your multi-column journal. Did it ask me to prove? No, we already proved that before. It's already, those totals should already be proved. Okay. Are we good? I think we are. Everything is posted. My post reference has something filled in every row except for the check mark, which already has its special columns over there. Save and continue. How did I do? But I thought I already hit save and continue. Page 1. I already posted them. Oh, we're doing another one? I think I'm kind of done here. All right. The on your own, I think that was enough for now. Looks like we're on to some more transactions. I don't think we're going to finish this for, excuse me. Oh yeah, this is the on your own piece. Sorry. This is the part that you do. I was wondering what was going on there. I think I'm just going to cut this video off where I finished. All right. Take care and enjoy your day.